Time to look at your market news now. Asian markets trading lower after the U.S. Federal Reserve raised interest rates and signaled further hikes ahead. U.S. stocks were volatile and closed sharply lower following the announcement. Chinese tech stocks led declines as Hong Kong's benchmark gauge headed for the lowest close since 2011. Fed officials forecast that rates would reach 4.4% by the end of this year and a 4.6% in 2023, a more hawkish shift in the so-called dot plot than expected. That implies a fourth straight 75 basis point hike may be on the table for the next gathering in November, a week before the U.S. midterm elections. Meanwhile, Blue Label Telecoms has finalized a deal as it completed the long-awaited recapitalization of mobile provider SABC. But because we've been talking about the Fed, today is also another important day locally where we have our South African Reserve Bank also set to increase interest rates, and everyone talking that it's basically a toss between 50 basis points and 75 basis points. The Reserve Bank did highlight at the time that they were worried about high inflation expectations becoming more entrenched in the economy. But to talk to us about the market dynamics, we are joined by Cornette van Zyl, who is from ABSA Asset Management. Cornette, thank you so much for your time. I mean, let's get right into it. I mean, given the performance we've seen with the Asian markets as a result of that Fed announcement, how's the JSE holding up at this stage?
Yeah, so generally seeing a bit of risk-off trading at the moment. The JSE, the last time I looked, the all-share down 90 basis points, and it's pretty red across the screen. All of the major indices, the resources index, the industrials, financials, all of them, in the red. And like you said, internationally, we're just following what's happening there. Across Europe, we're mostly down. Asia was down overnight, and also in the US and the States last night after those FOMC meeting, we saw both the Nasdaq and the Fed closing in the red. The Rand, that is actually pretty interesting. Initially after the Fed meeting, we saw the Rand weakening, but it seems to have been stabilizing a bit. So that's definitely quite interesting. We're sitting at around 17 Rand 60 to the dollar the last time I had a look.
So looking at that press statement and also, the questions he was taking, or rather his tone and language in that Q&A session after the statement was released, which parts of that, or rather both, that caught your attention?
Yes, so there were two things. The first interesting thing is that the Fed has increased expectations for interest rates towards the end of this year and to the middle of next year, where they now expect the short-term interest rate to hit around 4.2 to 4.4% by the end of this year and to peak at around 4.6 to 4.8% by the middle of next year, and then only start cutting. So that is quite a lot bearish than what we had previously. This indicating that the Fed will probably hike interest rates at bigger intervals for longer than the market initially expected. And also they have revised their growth forecast downwards for the US, and they have also revised their unemployment rate forecast upwards for the US. So that's the first interesting part. The second interesting part was that Powell was quite clear that their overriding mandate is to bring inflation back to the targeted rate of 2% in the US. They are sitting above 8% at the moment, and that they will do that at whatever cost to the economy, that is necessary. And in fact, also at whatever cost might, be implied for the global economy. So their overriding mandate is to hike and to bring inflation under control, even if it causes a real recession in the US.
Would it be presumptuous to assume then that if inflation does become a little bit too difficult for them to at least bring down, that we might see the federal funds rate push to about 5%?
So that's not the expectation at the moment, but I think it's a fluid situation. And yes, you could be right. That could indeed be the case. We'll have to monitor it from meeting to meeting and hear what the Fed says. But the last couple of meetings have seen that interest rate target being hiked every single time.
Yeah, as I mentioned in my intro, I think in the beginning of the week, it's a really busy week for central banks. I mean, we've touched on the Fed. We've also got the Bank of England here. And again, markets split between 50 basis points and 75 basis points. How far would you be expecting policymakers to go, given that the pound has weakened and, you know, the UK is on the brink of a recession?
Yes. So expectations are probably for them to hike by 75 basis points, and that would, essentially be the right thing to do, given how high inflation is in the UK. And unlike in South Africa and the US, it does not show any signs of easing. That said, however, the UK is in a very difficult situation at the moment. As you mentioned, the pound is at multi-decade lows compared to other major currencies. Economic growth in the UK is under significant strain, and they will probably head into recession towards the end of the year. And add on top of that, the political will at this point, with them just appointing a new prime minister. So I wouldn't be surprised if they hike by 50 basis points instead of 75. But realistically speaking, the right thing is to probably hike by 75 at this point.
And then locally, 3 p.m., we've got the South African Reserve Bank, and I do know that we will be giving our viewers the analysis of that after the announcement has been made. What's your expectation here? Is it going to be 75 basis points? And how concerned do you think, I suppose, the Reserve Bank is on, inflation expectations becoming more entrenched in the economy, etc.?
Yeah, so the expectations is for a 75 basis point hike here with us too. And the devil will really be in the detail as to sort of hear what the rhetoric is in terms of the expectations from this point onwards and how hawkish they are. Just bear in mind, we did have CPI numbers released for South Africa yesterday, where CPI actually came in at 7.6%, down from 7.8% a month ago. And also, quite positively, our core inflation number here in South Africa, which excludes our fuel inflation and food inflation, that actually beat analyst expectations and came in at 4.4%. from 4.6% a month ago. But that, unfortunately, is not enough. The Reserve Bank here targets inflation to be between 3 and 6%. And as I mentioned, we are close to 8 at this point. So they do have to take action to bring it back into control. And secondly, they do also, with the rand as weak as it is, probably want to make our yields more attractive. And therefore, they would probably be keen to raise interest rates at this point.
Is cash the right place to be in right now?
Yeah, so that might seem like a very easy question to answer, but it's not. One might be tempted to take your positions in cash right now, just given how much both the bond and the equity markets have corrected over the last couple of months. But on the short end of the cash curve, so your money market funds, etc., repo is sitting at 5.5 at this point. We're running at inflation at around 8. So that means we've got quite a deep negative real yields on the short end of the curve at the moment, which means you are not even beating inflation on your cash investment. There are, very good quality stocks at this point on the equity market that offer you very attractive dividend yields that actually beat cash returns at this point. And then if you look into the bond market towards sort of like the longer end of the bond yield curve, your sort of 10-year period, you will be yielding above 10% at this point in time, which again is actually quite an attractive positive yield for investors, a positive real yield for investors at this point. So I would be tempted to say I'd rather go for a little bit of a longer term perspective and take advantage of those higher yields that will give you above inflationary returns at this point.
Cornette, thank you so much for your time this afternoon. That is Cornette van Zyl, who is from ABSA Asset Management. That is it from me. I leave you with Nompumlelo Siziba. And don't forget, at 3 p.m., we will be keeping you updated with that MPC rates announcement. So stay tuned for that.